The discussion between Mike and Joe just earlier was, amongst other things, about risks. Risk is one of the entry points to the discussion we can have on nature. Climate risks, nature risks, they're intertwined and they're systemic. Systems thinking is a very good way of thinking about climate risk and nature risk, and I was pleased to hear this morning, I felt that was sort of a common thread throughout several of the sessions this morning about multidisciplinarity, about thinking jointly, joined-up thinking, and about systems thinking. And also the now many times mentioned Simon Sharp's book is very much about systems thinking as well. Nature-climate nexus is a prime example of a field where we should be applying systems thinking. Why? Well, because these are intertwined and interlinked phenomena. That scary-looking diagram you see on your left is called the cascading global climate failure. There are many of these diagrams out there, but it shows, amongst other things, the links between climate change, nature, between civilization, between the economy. It has a scary mosquito on the left to bring you to the edge of your seat, to realize this can impact and will impact your health. It relates to state fragility, migration. All these things are working together in ways we don't really understand fully, but there are feedback loops and reinforcing effects that unfortunately tend to make these risks, nature and climate risk, worse rather than better, so the way they work together. Then systems thinking is then a way of making sense of complexity in the world by thinking in terms of wholes and relationship. And you create more resilient systems and develop effective action by thinking of things together. The quote on the right, by the way, is the reply I got from ChatGPT when I asked he, what it thought of how we can apply systems thinking together with climate change and biodiversity. And I am pleased to see that I agree with ChatGPT, or ChatGPT agrees with me. So that's always comforting to see. We think in terms of systems here at Imperial College, or we try to. For instance, at our sister institute at the Grantham Research Institute, they very much work in terms of systems and systems modeling. They have multidisciplinary teams. I'm involved in hoping to create a PhD program with colleagues out in Silwood Park, which is focused on natural sciences and ecosystem restoration engineering, but which will have a component of social sciences, of finance, policy, and economics in it, because those models shouldn't be operating independently. They're all part of the same system, and we need to understand the limitations of all of these worlds. My hope for today's session, we're told as lecturers to always tell our students what to expect, and I am treating you right now as a bunch of students. I'm hoping to give you a flavor of what we work with here at the CCFI, and we'll do that through 3 questions. We'll be talking about what biodiversity investing is and where we go from here. We'll talk about food and nature, a symbiotic relationship that needs improving, ? What the progress is and future is on integration of nature-related risks. To do this, to go through these questions, I have with me today 4 guests. We are starting off with a conversation with Dodwell, and then 3 additional guests will be joining us. We'll have a panel discussion, hopefully 10 minutes for Q&A, and then I'll do a brief summary at the end. So to motivate our discussion today and put you at the edge of your seats, I figured I'd put some frightening-looking headlines out there, or up there for you to see. Half of the world's GDP is moderately or highly dependent on nature, and I would add to that all of the world's GDP depends on nature. This is just a moderately and highly dependent. Basically, our existence depends in some way, shape, or form on nature. And this is because, and again, I think Mike referred to this figure earlier about the European Central Bank. I was actually surprised by the number that 3/4 of all bank loans are highly dependent on biodiversity. So that's a very high number. And of course, because companies are dependent on or exposed to biodiversity and nature risk, investors are too, and shareholders are too. So we're all exposed in one way, shape, or form or another. There are aspects to this that have to, or nature and climate change also impact people. It impacts the global south typically more than the global north. The flip side of the coin is our opportunities to restore nature and restore biodiversity largely reside within the global south as well. So we need to think globally when we want to restore biodiversity. We can't just think, it's important to think of the UK, but it's also important to think of the rest of the world. And it has to do with livelihoods and people. So what do we do about this? Well, in our own small way, as researchers, we try to contribute to finding solutions by producing relevant and applied research. At the CCFI, our research works around two main questions, if I were to organize them. How to account for nature-related risks in the financial and corporate world is one question, and how to direct more investment into nature is the second. And the first one being sort of the bit more defensive, thinking, well, let's manage this risk, and the other one, okay, let's do something about it. Both of those are important. Every time I'm, okay. Yes, and so this is some of the outputs we've produced recently related to that. So they're briefing papers or related to, this is a series called Food, The Future of Food. We have one recently on nature, risk and investment opportunities in Asia. And we've also produced some research for Impax asset management on corporate action on biodiversity, which is the subject of our conversation with Chris in a moment. So I just thought that the last slide I'll share with you is actually some of the conclusions from that report, because then that will serve as a basis for the conversation we're having. The question we were asked, we actually spent a bit of time coming up with the question, which I think was actually a good way of doing it, because we knew we wanted to do some research on biodiversity in the private sector, but we ended up asking two questions. What drives some companies to voluntarily adopt biodiversity actions? That was one question. And to what extent can these actions be scaled up and how? We did this research through 5 case studies. It would have been lovely to have lots and lots of data to do other types of analysis on this, but there isn't a whole lot of data out there because we still haven't come very far in terms of doing private sector investments in this. So we started with an exploration of drivers looking at 5 sectors, and in fact through 5 different cases in those sectors. And just briefly for each of them, if we talk about just a driver, this is what we found. In the energy sector, in particular there, we're looking at renewable energy companies and how they invest in biodiversity and nature measures. We found that actually regulatory compliance was the main driver. So they did this because they had to, it was part of their license. They also did it because they want to get along with, to put it informally, their local stakeholders. And again, these large, let's say, solar installations happen somewhere where there's people living, where there are farmers living. So doing something jointly that has related to nature improves all kinds of things in the project, including stakeholder relationships. For cities, we saw that we looked at Canary Wharf, and those of you, I'm sure most of you have been to Canary Wharf at some point. It's a beautiful green oasis in the middle of the city, or part of Greater London. And we looked at what the potential motivation and drivers could have been for all the investments they have done. And partly we found that it was self-motivated from a perspective of cost savings. So for instance, having green roofs or rain gardens, all these things can save other measures, for instance, insulation or electricity bills. So you invest in nature or green infrastructure, and it's actually helping your, reducing your cost, let's say. But it's also the idea of investing in a place where people want to live. So creating long-term relationships with the residents, people who want to continue living in lovely green spaces. 3 more sectors. We looked at the water sector. We looked at the case of, in this, we looked at the Central Arkansas Water Utility, which had bought up a large area, a large forest adjacent to where they sourced the water from. Why did they do this? Primarily to get access to clean water. You can do this through a grey infrastructure, so through a purification process, so building something, or you can actually use nature. And they decided to do this. And of course, this has lots of co-benefits in the form of biodiversity, as well as carbon, I would add. But this was the main driver for why this particular company invested in nature and ended up investing in biodiversity. Agriculture is maybe the sector that we think of probably is the most interrelated with nature, because it is in nature, and often agriculture happens at the expense of nature. So you cut down forests in order to plant something. We looked at McCormick, an American company, and looked at the way they were sourcing some of their spices. And it was clearly for them, the motivation for doing what they did in a sustainable way was that the access to the supply chain would become more resilient, resilient in both the sense of being resilient to climate change. So growing something in a natural way you create a much more resilient system and much more resilient to climate change, but also economic resiliency. So they invested a lot in smallholder farmers for them to work on the ground with nature solutions. So they got their commodity, if you will, but they also got nature solutions at the same time. And finally, we looked at the case of insurance. So we looked specifically at the possibility of using a green infrastructure in coastal areas to build resilience. So you can protect your asset by building a seawall, for instance, but you can also plant, in some areas at least, you could plant mangroves. Mangroves will then protect your asset in addition to creating a host of other co-benefits. And there are attempts out there, pilots out there doing this. However, we also see that they're not happening at the scale we would like them to happen. So we're looking particularly at the case of insurance companies trying to get into this coordinating and financing role of setting up these solutions, so that ultimately because that's the cost saving, there are cost savings in this for them, and ultimately they would be able to pass this on to the companies taking up insurance with them. But that's early stage, and there are lots of barriers still to that, although it's a great theoretical idea. Chris Dodwell is Head of Policy and Advocacy at Impax Asset Management. Impax is a specialist investor focused on opportunities arising from the transition to a sustainable economy. Before joining Impax, Chris worked on climate policy for the UK government for over a decade, amongst other things, helping set up the European carbon trading system and leading the UK delegation to international climate negotiations. So thank you very much for joining me, Chris.
Great to be here.
So I briefly went over the findings in the research we did for you on corporate drivers for biodiversity. And you work for an investment fund, so let me put this very bluntly. Is biodiversity investable?
So I guess the first point is it slightly depends from whose perspective. So let's take it from Impax's perspective. So we invest largely in public equities. So we're investing in large corporations, and even for those, there's an extent to which it is already investable, but there's also a very large extent to which it isn't. So on the first bit, what you can invest in are companies that are providing solutions that are reducing and halting the impact of the economy on biodiversity. So if you look across the 5 drivers, we heard about IPBES earlier on, which is the kind of biodiversity equivalent of the of the IPCC, the Intergovernmental Panel on Climate Change. So they've got 5 drivers they talk about, and for each of those drivers, you can actually see investable solutions even now. So the first of those is around land use. So if you are investing in, say, precision agriculture that allows people to make better use of land that's already been converted, that'll take pressure off land use. Second one is exploitation of species. So again, if you're investing in sustainable aquaculture or alternative proteins, that's going to kind of reduce the requirement for people to take fish out of the sea. Third one is climate change. We all know there's a host of things you can invest on climate change. The fourth is around pollution. So again, you can be investing in companies that are providing water purification services. And the fifth one is around invasive species. And actually, even there, where you're talking about trying to make sure that ballast water doesn't bring prawns from the wrong part of the world to another part of the world, there are investable options there. So there are some investable options there, but they're not at the scale that we're seeing the kind of climate solutions. But the real issue is that there's very little that's investable around nature restoration. And I guess that was what prompted us to come and talk to Imperial, is we wanted to find out, you know, whether there's stuff hidden in the supply chain, whether there are more case studies out there that you could then replicate and invest in. That's from the perspective of a listed equity investor. There are some private markets ideas out there, and there are some ideas out there that are investable that generate return at a farm level, say around regenerative agriculture. But these are pretty small scale, and it's quite difficult to think about how we can scale up financial investment into them. But there's definitely some chinks of light out there at a kind of private markets level.
So with that in mind, were there, based on the research we did for you, but also your own research, because you did your own piece report on top of that, you've just come back from Climate Week, are there recommendations in terms of both for policymakers or for corporates that we can share with the audience today in terms of scaling up, given the barriers, but scaling up finance in this area?
Yeah, definitely. So I think on all of them we are at, I mean, this is self-evident. We are at a far earlier stage in the process than we are on climate. But at the same time, the situation in terms of biodiversity loss is actually probably proceeding faster than the deterioration of the climate, which is already in a pretty bad state. We've lost something like, I think it's around 70% of wildlife have been lost in the last 30 years. So, you know, it's a pretty stark number. And we are, you know, that's conversion that's happened in all of our lifetimes. So the recommendations that we had, and I think they are echoed in Climate Week. I mean, but again, I'd probably draw the comparison with climate. So on actions by governments, it's already clear now that actually things have flipped in the US, even in the space of the last 12 months. There is a feeling of inevitability about the energy transition. The Inflation Reduction Act has helped generate that. There is, as Joe was saying, there's a real feeling of discussion of opportunity. On nature, it's a much earlier level. And the real challenge that we've got to cover on nature is this issue around revenue generation. So there isn't a system at the moment that allows us to put value on biodiversity and therefore for there to be additional funding that goes into nature. So I think governments really need to work harder on what are the policy levers they need to kind of be pulling. We've got the Global Biodiversity Framework. That's going to encourage the development of a set of national strategies and biodiversity strategies and action plans, a little bit like the NDCs that we've had that come out of the Paris Agreement. But what goes into those is still really unclear. We just don't have an equivalent theory of change around the policy framework. So I think that's something that governments can be doing. More regulation of the type that we talked about that basically just says you must and you shall not, but also thinking about that revenue question and how do we actually place a value on nature. There's some talk about biodiversity credits, but it's not what we're talking about on carbon. That point around universally mixed pollutants that happens with carbon doesn't apply here. So I think we're much more talking about the work on credits is much more like a monitoring and reporting system where you can actually start to track positive impacts and work out how much that cost. But that's not going to create the revenue stream for you. So I still think a lot of hard work needs to be done then. So that's where governments need to go. I think where the companies need to go is they need to be more vocal about what they're already doing and create platforms for showcasing not only the work they're going to be doing under TNFD to kind of track the impacts and their dependencies on nature, but also the solutions. You guys found it really hard to get answers out of the companies that you'd contacted. There was almost like this early evidence of this green hushing where people sort of felt they didn't want to overclaim in terms of what they'd done. So people need to feel more confident about how they're measuring biodiversity within the actions they're taking and the cost-benefit analysis that they've undertaken. And I think that's what leads into this huge opportunity for the academic community. So that was a third set of recommendations, is that actually this is an area that really needs study at a research level so that we, you know, that policy framework Back when I started working on climate in the late 90s, early 2000s, a lot of those ideas that we were bringing into the policy world had come out of the academic community. So there's a real opportunity to design and to think about this. I personally think we may need a different conceptual approach entirely in order to kind of think about nature as infrastructure and how do we kind of properly invest in that. So it's really exciting that, but also I think that research around tracking and cost benefit is something where academia can lead the way.
I remember being struck by just linking back to British Investment International, and when they were called CDC, they published a report on Zephyr power in Pakistan. And just a fairly simple and very transparent report showing how the benefits for that particular wind power project in Pakistan of planting mangroves around their asset and what that did to lower the O&M costs over the 20-year lifespan of the project and the savings that's created for the company or will create for the company. So that's an example of using nature to protect your asset, and this was from a pure private profit perspective. And just putting those figures out there was also, and this was sort of semi-academic, but you can do more of it. And obviously we hope to do more of that at the CCFI as well, sort of bridge that gap between the theoretical research and what's going out in the private world. I want to ask you one more question, sorry. No.
Well, I was just going to comment that one of the sort of tragedies of this is that that's still probably the best case study we've got out there, and it's, 3 years old? Now, TNFD coming through really provides an opportunity for many more pieces like that. The TNFD guidelines are, already, they launched at the beginning of last week in New York. They've already got a really good set of metrics there that actually are, okay, what would you measure on pollution? What would you be measuring on water? So if they are deployed and companies start to report on them, and then investors are required to report on those in terms of the impacts and dependencies, that would be great. But I think the area that needs a bit more work is how do you report on the positive impact? And it's meant to be within TNFD, but it was a bit harder to do. And to be frank, even on carbon, we're not so good at reporting on the avoided emissions and having kind of clear, simple, standardized methodologies there. Yeah. Sorry,
that's right. No, that's fine. I think what we'll do now, I'll invite the rest of the panel to join us, and then we can broaden the discussion a bit. Thank you very much, all of you, for joining me. Katy Baker at the end of the line there. Katy is a consultant at the UN Environment Programme Finance Initiative, where she works on climate risk and nature. Katy has been involved in projects on the TNFD, on the TCFD as well, and she also supports the coordination of something called the Biodiversity Credit Alliance, which is an initiative with a vision of transparent, trustworthy, and efficient global market in biodiversity credits. So we'll get to that a bit later on in our discussion. But I wanted to stay a bit on risks, because we started touching on risks speaking to Chris here, and how, in addition to obviously investing in nature, we have to bring the consideration of nature risk into whatever portfolios we have. Can you talk to us a bit about how you work with institutions and the TNFD, so the Task Force for Nature-Related Financial Disclosures?
Yeah, absolutely. So just to give a brief overview of UNEP. So UNEP, United Nations Environment Programme Finance Initiative, is a strategic partnership between the UN and nearly 500 banks, investors, and insurers. And the UNEP has really been working over 30 years to drive the sustainable finance agenda, set standards, and grow a global network of finance institutions. So at UNEP, we've been supporting TNFD beta framework piloting sessions. And so since 2022, we've had 2 piloting sessions. And really, the key learnings that we've taken from that with the group of global financial institutions is really looking at both challenges and opportunities. And I'd say there's 2 key challenges. One is internal capacity building, where it's really translating the importance of nature into climate risk and really leveraging TNFD with TCFD, and really when including nature into climate risk reporting, it's not just a CSR challenge, but it's really bringing it in a whole new scope of risk management into their processes. And they can do this by using the tools and resources that already exist in their climate reporting that they've been doing for the last couple of years. And so the second key takeaway that I would say is the data challenge. And of course, with nature reporting, there's additional aspects that they have to look at, including dependencies and impacts, and not just risks and opportunities. And so here we've really seen that it's about starting and looking at the data that already exists, and when they don't have it, it's about using proxy data. And we've seen banks use best case studies using tools such as Encore, IBAT, PBAF, and so we're really seeing a huge movement and greater understanding from financial institutions on that side. And now with the updated TNFD framework, we really don't see as data and metrics as an obstacle for financial institutions and any stakeholders to start their reporting, because they can start now.
Do you think they'll start now? How quickly will it happen?
Yeah, so from the feedback from our piloting, we've seen banks with great plans for the next 12 months to really start incorporating nature into their climate disclosures.
I like that. I like the sound of 12 months. Good, great. We'll now turn to Rob. Rob Appleby is the founder and chief investment officer at Cibus Capital, a London-based private equity platform looking for investment opportunities in the food and agriculture arena. I also know that Rob has his own farm where he's doing regenerative farming in Dorset. There's also wilding and woodland projects involved in that. So, Rob, I'd like to turn our attention to food and the food system. And by that I mean agriculture, but not just agriculture, the whole value chain of how we produce food, process food, eat food, food waste, etc. So just to put it into context, the food value chain is responsible for about 1/3 of global greenhouse gas emissions, and agriculture is the primary driver of nature loss. So again, 1/3 of global greenhouse gas emissions and the primary driver of nature loss. So we're having to deal with an incredibly important sector. Of course, energy is incredibly important in terms of climate emissions, greenhouse gas emissions, but we shouldn't forget about agriculture. I have seen you say, Rob, and that's the danger of leaving things online, that gone are the days where you have to make compromises to do good. So yet, I keep on hearing when I do my research that one of the barriers holding back nature investments is that we still have unattractive risk-return profiles. So explain to us, how does Cibus do it?
Thank you, Pernille. And I spend my time with my colleagues, and there are two representatives here, Georgie and Ella, both from this august organization, 8 days a week, 24 hours a day, thinking about your question, which is, how do you get financial returns alongside this word sustainability? And it's clearly not easy, otherwise everyone would do it. And I think a comment was made by Joe earlier, which is there are compromises that have to be made at an early stage or at the beginning of this journey. And I think that biodiversity, particularly in light of everything that's going on in agriculture, as we've discussed, is at the very start, but it's helped by the fact that the carbon market has had a jump start. And agriculture is being helped by the fact that the energy transition model has been going for 20 years. So this agricultural transition, and just to pick up on your point, which is that the farmer, the landowner, has been cast as the villain. 30% of global greenhouse gases, 28% of the plastics in our ocean, 30% of the food that we produce wasted between farm and fridge. All at a time of climate change, all of it at a time when we've got these geopolitical situations where we have had these dislocations in input prices, the weaponization of gas from our friend Mr. Putin. And we've really either been hindered or helped in this intellectual transition by these factors. And I would say that when I look at sustainable food and farming, we're helped and guided by a few things. One is the regulatory changes that are clearly coming down the pipe. No investor in their right mind wants to be sitting there with stranded assets, the Minsky moment, and just having stuff that's completely uninvestable. At the same time, consumers are having a big say in this narrative because, I mean, you just have to look at alternative meat and dairy as a huge growth sector. And that has really been driven by people who want to know what's good for them and good for the planet. And I'll just illustrate use one illustration to sort of tell you why I think that we've reached this nexus where previously doing good has been a compromise, where today it's an addition. And we invested about 5 years ago in an olive oil business in Portugal. And it's a Stone Age business. You crush an olive, you make olive oil. It's amazingly simple. But we managed to do a couple of things which moved from being a monocultural sort of behemoth to something that is today the biggest organic olive oil producer in the world, one that uses less water per kilo of olive oil, so more crop per drop, has almost entirely replaced chemical inputs, which again are, they're petrochemical input, with biological alternatives like pheromones and other things, and then using technology to help us make better decisions as farmers. And just to sort of shine a light on something that's confidential and I'm not allowed to talk about, but I will, is we bought this company 5 years ago at, let's call it round numbers, $100 million, and we just sold it for $300+ million. And some of the attribution is all the changes that we made and operational efficiencies and all the things that private equity people might do. But a whole bit of it was the sustainability aspect. And I'm going to put a number on it. I can't prove this, but let's say it's 50-50. So if I hadn't done, or we hadn't done, what was really looking at the theory of change, putting KPIs into key performance indicators into the business, and compensating and incentivizing management to get those done, we wouldn't be in a situation celebrating commercial returns with sustainable tick box exercises.
It's really fascinating, and it's sort of you're making the point of private equity being a force for good in this case, where quite often, again, they cast as a villain, but in this case, when the right people are at the helm, such as you, it's great. Let me turn to Bonnie. Bonnie Waring is the head of the Waring Ecology Lab. She has her own lab, which I think is pretty cool, at Imperial. The lab investigates how the ecology of plant and soil microbial communities influence the carbon cycle and its feedbacks on climate change. Bonnie's research currently focuses on land-based negative emissions technologies for mitigating climate change and the dynamics of soil carbon formation and loss. So, Bonnie, you, for me, represent the life sciences and natural sciences here at Imperial College. You're based in Surrey on this huge campus we have out there. And you do what I consider to be real work. You actually climb trees, you dig in the soil, all of those things. So from your perspective, what are some of the thoughts, any thoughts on what Rob said about integrating agriculture with nature? And in particular, I know that you've been working a bit on nature-based solutions. For instance, you told me about the other day about your recent trip to Indonesia and how to combine agriculture and nature and people.
Yeah, well, agriculture really represents what an earlier panelist referred to as a series of wicked problems. So one thing we know about regenerative agriculture, which is an umbrella term for a lot of different techniques, is that it can achieve co-benefits of making farms more biodiverse, and it can sequester some carbon. But the agricultural techniques that tend to be used in regenerative ag are very similar to those used in organic systems, which are very well studied. Now, on average, I'm not talking about individual projects. We just heard an example of a great one. But on average, organic systems are less productive. They produce less food per unit land, about 20% less in a global study. So what that means is if we are enhancing nature on farms, using less chemical inputs, providing wild edges and hedges, we are also putting more pressure on converting existing habitat to produce the same quantity of food. So here we run into a trade-off. How do we get the same level of production that we do with our traditional, very environmentally damaging agriculture in smaller amounts of land? I'd also like to speak to the issue that a previous panelist brought up about how we're pretty good at knowing how to conserve natural habitat, particularly forests, but have more difficulty restoring it. Now, a lot of the finance, particularly through the voluntary carbon markets, is aimed at restoration projects, which can have the dual benefit, again, of sequestering carbon and protecting biodiversity, which is fantastic. And the primary barrier that I hear outside the natural sciences world is how do we channel funds to these projects? How do we get people paid to do this restoration? But on the natural sciences side, what I think a lot of people don't realize is that these projects have a very high rate of failure for biological reasons. A recent survey of reforestation or tree planting exercises in Southeast Asia found that we're losing between 50 and 90% of the trees planted in the first 5 years, because we still lack the knowledge of how to recreate an ecosystem. Nature is good at this, people less so. One potential solution is let ecosystems regrow naturally, but that is very messy from an accounting perspective and much more challenging to get finance channeled to those types of projects, often very loose, groundswell movements where individual farmers are letting trees come back on their land, for instance. So there are a lot of challenges that I see that can be overcome by having the actual land managers, the land operators, the natural scientists, and the finance community talk to each other a lot more closely, which is great that we're all here.
Oh, that's really interesting. We talked about metrics. I think Chris talked about that earlier. Other people have been talking about, Joe maybe earlier, about measuring. So for carbon, we have CO2, it's very easy. For biodiversity, nature, it's not so clear. From your perspective, because I see in the finance world, financiers say we must find that one metric. And to which I want to say, don't put nature into a straitjacket. You're not going to tell nature how to behave. Nature actually decides over us. It's not the other way around. You tell me, Bonnie, from your much more informed than me nature perspective, what's the outlook in terms of finding some kind of way of measuring that's not too complicated, so that investors who want to report on impact can use that?
So I'm speaking as a biologist here. There are others on the panel who think about this way more than me. As a biologist, I have some reservations about the idea of trying to summarize biodiversity in one number or just a few. The first is, biologically, biodiversity isn't one thing. Usually we measure it by counting species. But some species represent 300 million years of completely unique evolutionary history. They have traits, proteins, capabilities that no other organism does. Does just counting species give us that information? It doesn't. The other challenge that I see is if we reduce biodiversity to one number or a set of a few, how fungible are those numbers? Can I deforest 1 acre of primary rainforest in the Amazon and replace it with 20 acres of habitat in a more biodiverse, in a less biodiverse country? The other thing that I want to say, which is perhaps a perspective that you may not hear that often, so the sort of AI tools for monitoring biodiversity still have to be ground truthed against actual observations of biodiversity on the ground. And I've done and worked with people who do that, and it is incredibly hard. I'm talking about people in the field day and night just to focus on one taxa like bats. It's a titanic effort to get the rare species, which are the ones that we actually want to know if they're there or not, right? It's easy to count the common ones, but most of the biodiversity is in what we call the long tail, the many relatively non-abundant organisms. So if we still have such trouble doing it by hand, can we rely on satellites or global networks to get us the information that helps us preserve that rare but potentially very valuable biodiversity? So those are my reservations. It doesn't mean it's not possible, and I would love to hear more about the research being done on how to make it possible with the new tools that are coming out.
I think that's a great, keeping that in mind, I'd like to ask a question, and you all will get an opportunity to answer, and that relates to biodiversity credits. So we've spoken about it a bit earlier. So the voluntary carbon market is something you've all heard about, and it's been going through ups and downs, been very volatile, both in terms of prices and popularity in the past year. and keeping that in the back of our minds, what's the outlook for having some kind of biodiversity credit market, operate either internationally or even locally? So here in the UK, UK is viewed as a pioneer in this area potentially, because we have the biodiversity net gain legislation. On the back of that, it will be possible to buy credits. So I'd like the panel to comment on that. Can I start with you, actually, Chris?
Yeah, okay. So I attended a couple of events about this last week in New York, and I've got to say, I've definitely got some misgivings about the idea, but I was told, one of the organisers came over afterwards and sort of went, no, we're not talking about something like that, Chris. So my misgivings were around what you said about fungibility. And it links to what you were saying earlier on around just the fact that this isn't interchangeable. You can't replace one piece of biodiversity that's been preserved somewhere or restored with something elsewhere. So you miss out at the moment on that location-specific stuff. So when we were originally setting up the UK emissions trading system, there was a whole load of academic literature out there about whether you'd have things like the impact of localism. So we were trying to copy the acid rain program in America. And it matters where acid rain falls rather than where carbon is sequestered. So I think we should be very cautious around that place-based aspect. I think we should also be quite cautious about the fact that we haven't really got price discovery yet. We don't really, and that's, again, when we set up the UK ETS, we were trying to actually get price discovery and the CDM as well. So all of these things existed as a sort of, to start with, as an early stage experiment around pricing and around kind of how do you then create revenue streams for them, which I think is a big issue that we've got. So as long as the discussions around biodiversity credits start off by being around understanding what the cost of keeping nature as it is, definitely the best thing we can do, rather than trying to restore it, or the effectiveness and the permanence of the restoration measures, then that is good. But if we imagine it as being something like a VCM, where you kind of have interchangeable credits all over the place, I think that's going down the wrong direction.
How about you, Katy?
Yeah, no, I'd love to talk about this a bit more. I work for the Biodiversity Credits Alliance, which is an international alliance funded by UNEP, UNDP, and the Swedish government. And so the UN really is involved in the BCA because we want to have the biodiversity credit market is going forward, and we really want to have the best start possible. So the BCA has two missions. So the first one is to really help steer the development of the market by building a framework of high-level science-based principles, and the second is to provide guidance and encourage good practices for market participants on the application of the principles and achieve high-quality transactions that follow strict integrity criteria. So really, one of the main lessons that I see from the voluntary carbon market moving to biodiversity credits is really including the social aspect into the climate and nature nexus, and that's really including Indigenous peoples and local communities in the development of the nature markets, not just by safeguarding them in the biodiversity market, but putting them at the forefront of the conversation. And so from my side, UNEP produced a paper with the BCA during the World Biodiversity Summit in New York last week, which really focuses on with a risk lens, the business case for investors to support Indigenous and locally led approaches in biodiversity credits, which actually the result is reduce risk for all stakeholders with these just partnerships. So really, the outputs of the BCA are to set the stage and provide guidance, and this is one of many outputs of the BCA, which is following with definitions and further in the next couple of months.
But is the aim to actually be able to trade credits, or are you not even thinking about that? Is setting up the systems to be?
Yeah, so the BCA, as it's an international organization, what we are dealing with is with trading internationally with governments, and that's where they don't have the regulatory principles and where they require us to step in to provide these principles to follow.
Rob, how do you see the role of biodiversity credits, or is there a role?
Joe asked me the same question, sort of, and I'm probably a cockeyed optimist. I really think that, this is, and to your comment, we should be cautious, but I don't think we need to be timid. And that is because with biodiversity credits, in the same way as carbon and anything else that we've been looking at and talking about, you can't manage without measurement. And if measurement, which today in biodiversity is fiendishly expensive, I mean, you get a team of biologists down on our farm, it costs you petrol, costs you the guy's or the lady's time, the report has to be published, and so on and so forth, and validated. It's really cumbersome. But again, technology may not be the answer to this, but there are technological advancements which I think are really, really exciting in this field. And I don't mind saying there's a company called Nature Metrics. You may have heard of this. It's replaced these biologists. I'm a biologist myself and care very deeply about this, but the idea of taking a water sample and what they call eDNA, pushing it through a micropore and understanding what the genomic signature is in that water or soil at a cost of £20, 24 hours later, you have a whole map of what's actually been in the water or in the soil. And that to me is revolutionary because you're going to be able at some stage to measure cheaply and therefore manage and monetize these credits. And if you can baseline, if you can do the right thing around afforestation, keep these things upright, and you can measure not only sequestration and storage, but also biodiversity net gain, I think you're onto a winner.
Would that change, you think, how you invest in Cibus Capital? Would that be sort of a welcome additional revenue stream? How would you?
I think it's the marzipan level. I think you've got to do other things while we get biodiversity credits up and running, because they're not there today. I can't buy an ETF or a stock or a bond that's called biodiversity. What I can do is look around corners and say, what else can I do or invest in that kind of makes sense? And I'll lift the veil on my new best idea, which is to buy forest nursery businesses. Because as everyone plants hedgerows or trees or woodland recreation, or whatever it is, you need trees. As a farmer, if I want to plant a hedgerow with 20 different species, I have to wait 2 years while they grow them. They're not available today. And if we think that the soil, anything beneath that, sequesters and stores 3 times as much carbon as anything above it, and the tree is that interface between the two, trees have got to be a solution not only to carbon, but also biodiversity. So I'm investing very heavily in that sector.
Excellent. Okay, good. Wonderful. I'd like to open the floor to the audience. We have about 10 minutes or less, actually, 7 minutes or something like that. So, yes, go ahead. There's one there.
I'll go first. Hi, I'm Emily. I work for an NGO that works on peatland restoration, amongst other things. And I was just interested in asking the panel what they think the role of public finance supporting private finance is. So we're quite familiar, and it's come up today, the role in the energy transition that public finance has played in supporting private finance, things like contracts for difference, etc. In nature, there's the huge role that subsidies play in actually causing environmental harm, right, in the other direction. And we have a huge subsidies going into agriculture, and a lot of that potentially, is going towards damaging nature. So how do we harness public finance, and how do we make sure that that money is going in the right direction?
Who would like to take that question? Rob? Chris?
Chris, go on.
Yeah, I'll have a quick go. So first off, just bringing us back to this crediting question, if we had large amounts of public finance that was effectively going to go into biodiversity, but you needed to show action in return for that finance, effectively kind of payment for ecosystem services. This kind of crediting mechanism that we're talking about would be great. So the idea of an international framework where you have something like the Amazon Fund, but you've got measurable results coming back, that would be fantastic. But we don't have enough public capital, public finance to do that. So instead, we're going to have to try to do what we have so far sort of unsuccessfully done around elements of carbon, which is to work out how you come up with the right blend of public finance that will then de-risk or perhaps pump prime markets in biodiversity positive technologies. So that would be what I would suggest it needs to do. I mean, you'll probably need to do an element of that, building the market, but also then step back and start to say, well, hang on, now there's a revenue stream here, or we've established, we need to help support that by doing things as a joint venture. Much as we did on the sort of early days of wind farms, when actually you kind of come up with the European Investment Bank. With Impax, the European Investment Bank was our kind of cornerstone investor in our first wind farm funds and renewable energy funds, and then we brought in other people who could see there was a body of capital coming from public finance, and they would be it reduced their risk of participation.
I personally think that's absolutely spot on. I think there is a sort of J-curve effect here where you need time for these markets to develop, and I think it is blended finance that's going to fill that gap. And there are lots of examples of blended finance where governments or institutions may come in and take, for example, first loss or provide a guarantee to a project that's going to take a while to become commercially viable, subsidy, etc. I think all that on its own is not sufficient. You need to hang out there the idea that there's money in this, and private money, private capital, private equity, hedge funds, banks, insurance companies will come in and fill that gap.
I just want to add to that myself, that I'd like to challenge actually that narrative which is out there, which is like there is no public money left. There is money. It's just about what you prioritize spending it on. We found lots of money for COVID. I'm not suggesting this is COVID. But I also think it's too easy and a bit lazy to fall into the trap of saying, follows the reason, the logic being, there is not enough public money, therefore we need to find the private money. Well, what if all that's wrong? Well, what if that's not going to work? Okay, so of course we need to get private sector to take responsibility for its own actions and do things, and especially when it comes to supply chain and agriculture, there's so much they can do, and that will have a huge impact. But there are certain areas where the public sector will have to retain responsibility. Nature, there's so many areas of nature which exhibits public goods features, so you're not going to get a private revenue stream from it. You can't sell it to the same extent. So you need, for instance, protecting a national park or certain restoration activity, you will always need the public sector. So you need it for that, and of course for blended finance. But I think we shouldn't let the public sector off the hook too easily. It's about political priorities as well.
And not spending it on
other
subsidies that are currently destroying nature. So there are campaigns out there to kind of address that issue.
Go ahead.
What do you think about the rhino bond?
The rhino bond, okay. Yeah. Who wants to go? Who wants to say something? I can say something, but you can. No.
So the rhino bond was a World Bank issued bond that lent money to a bunch of African nations, and the amount that you then got paid back in terms of the coupon, so effectively you got paid back more the more successful the activities were. Is that right? Yeah? Okay. So we didn't subscribe to it. We did have a meeting with the World Bank afterwards and we basically expressed interest in doing something when they were next going to do something innovative like that, because it was a well-rated, it was a backed bond that was kind of investable. And we then subsequently did go for another one that they had that was around, that was linked to carbon credits associated with the provision of clean water in Vietnamese schools, actually. Anyway, so we're really interested in innovative bonds like that, and I think you could see some quite interesting stuff come up with that, because But it's the thing that makes it investable is the fact that it's the World Bank that's issuing it, and the World Bank's taking the risk, and the World Bank and the countries are then working with the World Bank to try to deliver the positive output. So I'm not sure how scalable it is, but I think it was definitely really great to see them do it. And, you know, Citibank got involved in it. Someone else made this comment earlier on. Mike, it was you. Actually, a lot of the important work that needs to happen at the moment is building capacity and interest level in these transactions, because when something then comes up that's similar to it, others will jump in. And the more you get that, then the next time something happens, you'll have 3 times as many people who recognise it and they can judge the risk and reward. So I think it's a sort of really good idea.
3 words, cute but expensive.
Okay, thank you. Thank you for this. I'll just follow up on this. I'm an entrepreneur and I'm from Sri Lanka. And I've been working for the last year or so on a project which I think follows very well on the Rhino Bond. So it's not so much a question, but what we're doing that may interest your panel. So in Sri Lanka, we have about 400 deaths a year of elephants as a result of human-elephant conflict. Agriculture has gone into forest areas, and as a result of which, elephants come to eat, and then the farmers attack them, and. And so we looked at the Rhino Bond and thought, how could you scale this and do this in Sri Lanka for an HEC bond? And the buyer of this bond was Velia in Denmark, the pension fund. So I've had a meeting with them, and I've had a meeting with the World Bank, and now I'm trying to see Citibank. I don't know if anybody's here from Citibank, but I've been chasing Courtney Lawrence for almost a month now. I'm here for 10 days in London. So we have a project which could be very interesting from an outcome-based bond. That's what you're talking about. But to go a step further, we looked at how you can actually monetize this. And in Sri Lanka, you have 3 national parks. You have an area in the middle which is occupied by human beings, and they throw their garbage, their waste garbage, mixed with wet waste and plastic waste, which elephants come to eat. So elephants ingest plastic, and quite a lot of them die. And it's also a disgusting mess. So we looked at how we could actually do something about sorting that problem, generating money from plastic credits, because Vera has 15 projects on plastic credits right now, primarily in Indonesia and I think Thailand, but nothing in Sri Lanka. We can generate credits from removing that wet waste and actually generating biogas. So you could have methane reduction. So you could generate credits there. And we also looked at how we could engage women who are in those areas to be waste sorters in the area. And for that, we've had discussions with the World Bank and also USAID so that we could do some kind of blended finance instrument. Now, I am interested, you know, before I drop dead, one of the things I want to do in my life is save Sri Lanka's elephants. So this is a project that has the possibility to scale in Sri Lanka, so you can actually have a meaningful conversation with developing countries on how they can make money. It's very important. How can they support their rural communities at the same time as saving the environment? And if we do it right in Sri Lanka, you could do it in Cambodia. I've met with the Prime Minister of Cambodia. We can do it in other countries in Asia. So I would really like all of you, especially the Impax gentlemen, to see if we can actually have a meaningful conversation. I'm only here till the 10th of October, and I'm here to do a job, right, before I go. And if there's anybody else, please let me know.
Thank you very much. We have time for maybe one quick last question. Yes, here at the front. We can ask you to please keep it brief.
Hello. Yes, quick question. Tessa Walsh from IFR. Hello. I'm just wondering, I've been hearing that the UK's biodiversity net gain legislation might be delayed, so I'm wondering what impact that will have on the country's ability to attract capital for nature. Thanks.
I mean, I've just heard it has been delayed, but it will come out in the new year. That's kind of what the information was, the announcement. So hopefully, still, you know, we suspend our disbelief and hope this one's going ahead.
I mean, if they've delayed for a good reason, then I think it's worthwhile. If if there are good reasons maybe to rethink the scheme, I'm not sure either. But in any case, I think we've come to the end of this session. I'll quickly try to summarize to some extent. My main takeaway from the discussion with Chris is that for Impax at least, biodiversity is investable in several ways, but also as we found out through our research with them, mainly when at the current stage at least, mainly when it's a co-benefit. So you manage, biodiversity will come along with other benefits in some projects, be that water or something else where you can make money from. On the food and the discussion with Rob, I think it's clear that the way we've been growing food in the past 70 years has to change. We need to integrate nature and agriculture. And this is going to be all the more important as the global population continues growing. And with the caveats of Bonnie, who explained that in some cases organic farming we will end up needing more space for that. So it truly is a wicked problem we need to keep on working on. And something else we need to keep working on is what Katy talked about, and the risk, integration of nature risk into financial institutions and corporates. We're already there. TNFD came out last week. Some people said this will change everything. I think of it as a milestone because it's just a building block to go to a future where we actually start proactively investing in nature. And the biodiversity offset credit discussion, it's complicated, it's worth pursuing, just like the voluntary credit market. There's no need to give up on just because it's difficult to walk away from it, but just to be cautious but not timid, as Rob said. Thank you very much, dear panel. Please join me in thanking them, and thank you for your great questions.